Mohamed, when you look at WIRP, is it difficult for the Fed to balance? So they've over-communicated, or they've communicated so much that a hike today is a done deal, but then they have the softer data that you were talking about.
Right, and this is the evolution of the Fed. In the old days, the Fed would look for any excuse not to hike. Now the Fed has become less data dependent, and it's a Fed that is keen on normalizing rates gradually. And I think what the Fed has embarked on is to take the phrase from Ray Dalio that Tom loves, a beautiful normalization. That is what it's seeking, and that's why it's going to hike today despite the weaker data.
How much will they reveal on reducing the balance sheet?
I think just the broad outlines, and they'll want to turn this to be as boring as possible. They won't want markets to worry about this because they can go very slow on this. So it's going to be, look, here are the broad outlines, but it's going to be boring.
Dr. El-Erian, when I look at what the Fed will do today, we've got to move on with forward guidance to the next two meetings in July and the late one in September. What will you listen for today from Chair Yellen in terms of this odd phrase that you have nothing to do with called forward guidance?
So I think, Tom, I'm looking for them to reaffirm one more hike this year as the baseline. And what I'm going to be really interested in is whether they point to a balance of risk one way or the other. A few months ago, the balance of risk was that we were going to get more than 3 hikes in 2017 in total. So it'll be interesting to see whether they hint that the balance of risk is now neutral or whether it's less than that. But I think they'll reaffirm the baseline of 3 total hikes this year.
Very good. Well, when I look at it and the certain number of hikes right now, can they do that with a new vector of rolling over inflation? In Francine's United Kingdom, there is higher inflation. We can't say that here, can we?
No, we can't, and that's one of the issues they have to consider. But also the charts that Francine showed earlier, which is ironic that financial conditions have been loosening while the Fed has been tightening. And now you're getting quite broad-based concern that what we're seeing in risk assets is a liquidity-driven rally that people are starting to get worried about. So the Fed is going to be torn between, on the one hand, the inflation number, on the other hand, financial conditions.